Hello everyone, welcome back to Trading Life Masters. This is Zisheng here once again. In this video, I will be sharing some of the key ICT concepts that I stick to every single time before I place a trade. These key concepts are very good as well for those that don't trade ICT concepts. Before we begin, please like, share and subscribe for more quality content like this. The first concept that we'll look at is always trade with confluences. So what are the concepts in ICT is key institutional support resistance levels, market structure, order flow, which is also known as trend, order blocks, fair value gaps, breaker blocks, Fibonacci levels or optimal trade entry, which is OTE, time and price theory, for example like London Q zone, New York Q zones, power of 3. Do not just take a trade solely based on one of these confluences. What I've seen from most beginner traders is they just trade solely based on order blocks. Yes, I do know that ICT is like the trending strategy right now, and people think that what they can trade is, or how they can trade is just identifying order blocks. It's very easy to identify any order blocks in the market. The problem is price won't just respect every single order block. So this is why it's very important for you to add on key confluences like the institutional support resistance level to confirm that this order block will see some reversals. So this is the very important first concept to improve your trading if you are using ICT. The second concept that we'll look at is low risk or high probability setups are often found from higher time frame levels. Now, why is it more efficient to use higher time frame levels than the lower time frame levels? It is because from what we have learned from ICT, he said that from the H4 and also the daily levels, it is much stronger levels as the institutional often watch these levels. So those are the levels that are highly likely to hold. That is why every single I trade, I try to have my bias aligned with the levels that I've identified in the higher time frames. The third concept they'll look at is it is not necessary to trade every single day. The lesser you trade, the higher probability you will be profitable. Always know when to stay out of the market. Now, because we are humans, we have emotions and things could happen in our life. And these are the things that it can affect our judgment in the market. So if you are not feeling well or if you are feeling angry or sad, just stay out of the markets because it could affect your judgment. Besides that, if you don't know what is happening with the market, if you don't know what trend is it, or you don't have a bias, choose to stay out of the market because that would be the best instead of fear of missing out, which can lead to bad trades. The next concept that is very important is do not trade on news days. News like CPI, NFP and FOMC, these are high volatile news and many things can go unexpected. So this is why it's better to stay out of the market in days like this. And for myself, I've done a lot of back testing and I realized that days with news like this, it often gives negative trades, which is losing trades. That is why for me, I stay out of the market whenever there is news like this. I just simply do not trade on that day. And of course, the website that you can use to check out if there's any news on that day, fastboot.com is the best option. The fifth concept is also very important as well. But this doesn't just apply to the ICT traders, it applies to support and resistance traders as well. Because it is very important to always trade with the trend. The probability of winning is always greater when you follow the trend. Now why? Think of this. Who are the ones that create the trend? Who are the ones that push the price higher? Who are the ones that push the price lower? It is the institutional. So when you follow the trend, when you trade with the trend, it means that you are following the right direction. You are following the institutional, you are following the smart money, you are following the banks. But if you try to sell against them or trade against them, it will put you in a big disadvantage. Unless you're operating a bank, then you can go ahead and do so. But I believe if you're watching this video, you're not someone that is operating a bank. So it's always the best to trade with the trend. The sixth concept that we are looking at is something that I always tell my students as well. Monday and Friday are the least symmetrical in terms of price action. ICT limits its trading to Tuesday to Thursday. Now, for me, I trade every single day when there is no USD news. So that is my rules. But the reason why Mondays and Friday they are slower in price action, Monday is the start of the weeks where the banks are just open, they want to conclude everything that happened during the weekend and there are some files that they want to open back, and Friday is the last day of the week where they conclude everything that has happened throughout the week. So this is why Mondays and Fridays are least symmetrical in terms of price action. The last concept that we are looking at is more based on personal development. Get away from the charts once you have achieved what you want to achieve. Everyone have different goals. Some people want to achieve 1% every single day. So if you have achieved 1%, get out from the charts, turn off your screen, turn off your PC and do something else. But if you can't do so, there's something you need to fix with your psychology, because patience and discipline is the key to success in Forex trading. I can give you the best strategy in the world, but without patience and discipline, you will still burst your account or you still face a huge loss. There are some people that when they have a winning streak, they decide to continue trading and trading and trading. And there's some people who are losing a lot and they decide to do revenge trading, which is not right. So this is why it's very important to have patience and discipline when you are trading in Forex. Here comes to an end to this video. I hope you have learned something that you can apply to your daily trading. If you are interested to watch me live trade, head over to trading.live where I do live streams daily on educational content and as well as live trading. Once again, I hope you have liked, shared and subscribed. See you the next time. Goodbye.